Hello traders, Gary Wagner here. It is 12:20 in Honolulu, 5:20 in New York on Thursday, 7th day of September 2023, and this is the daily report for gold and silver. Considering tremendous dollar weakness today, gold did have fractional gains, but only gained $1.90 or 0.09%, with average volume that does appear to be declining as we go into the holiday season of approximately 165,000 contracts. Gold is currently fixed at $2,045.30, basis the most active February futures contract. However, even though we saw modest or fractional gains in gold, when we look at the dollar index down just over 0.5%, we can see that today's $2 gain in gold is entirely the net result of dollar weakness. On Friday of last week, gold traded to its highest closing price of $2,090. Of course, when trading resumed Monday, we saw a tremendous spike to the all-time record high above $2,150 and then closed dramatically lower, followed by even lower prices on Tuesday, a tepid recovery yesterday. And although gold traded $2 higher than yesterday's close, we still remain cautious and, more importantly, undecided as whether or not the all-time record high that we saw on Monday and the subsequent sell-off is indicating that we're going to enter a corrective period, or whether it's a one-off and will be followed by gold finding support near these recent lows at approximately 2,030, with major support coming in different areas from $2,000, 2010, and then 2020. And that, of course, as we talked about yesterday, is based upon these last three tops, which is why tomorrow's jobs report, being the last piece of data that the Federal Reserve uses to make their final decision next week at the last FOMC meeting of the year, is extremely important. And as long as it comes in as currently anticipated, which is about 190,000 new jobs added last month, we can expect the Fed to continue to pause, and the expectations that they have ended their cycle of rate hikes to be the highest probable action by the Federal Reserve. When we look at this daily candlestick chart of the dollar index, we can derive a couple of things. First of all, volume has been relatively strong when we compare it to recent action throughout the year. As we go into the end of the year, we can expect that to lighten up. However, it is clear that the dollar has been in a defined downtrend from these highs that came in October, just above 107, to a decline of approximately 3.5%, with the current reading, as I said, at 103.663. Unlike gold, which may have begun a recovery after the solid sell-off that occurred on Monday and Tuesday, silver has been trading to a lower low, lower close, and lower high consistently since a large move down, which occurred at the beginning of the week, and that trend continues to today. Yesterday, we talked about the fact that silver closed just below the long-term 200-day moving average. When we look at today's low, that came in precisely at the 100-day moving average, which we said could be an area of potential support between there and the 50% retracement that occurs at $23.78.5. Today, we saw silver futures decline by approximately 17 cents. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.